All right. Good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for January 18th, 2023. Start with the sniper trade of the day. This is PBW, Clean Energy, on a 3 minute chart. So we have a gap up, gapped up to this level. The OR3 is here in the blue box. So that was the opening 3 minute candle. It came back down to here and opened the second bar here, went back through the peak of the OR3. So we take our entry there. This turns out to be our R10 minimum manageable risk box, and off we go. The first bar ran all the way up to here and then came back down and finished here. I would not be offended in that move if you locked in that much um, of your gains, so that you have a no lose plus dinner for two, and turn that into a science project. So um, I could live with I could certainly live with a stop here. I don't think you want to let something that got this high, which is more than 1R, come all the way back down where you would be exiting inside of your risk box, and let a trade that went to +1 turn into a losing trade. And that's why, to me, it's important to have a rule that just says, I'm going to change the rules of engagement so that the worst thing that can happen to me now, instead of losing 1R, means that I'm going to make $100. I find that psychological state change is significant when you look at hundreds of trades. So, in my view, um, your exit should probably be right about here. The next 4 bars or so gives you this nice little surge up, and then comes back to here. So I would not be offended if you took like a 2 bar low and locked in that much, because now you have 1 unit of risk, and now you have about +1. You've locked in 1R, and is there anything wrong with that? Not that I can tell. If I see this next move that now opens here, teases me a little bit, then goes racing to a new high, I'm not offended if you take half that bar and add that much to your gains. Now you're at about +2. Now when this rolls over, and then takes out the low here, there's a strong argument in my mind to take that as an exit and just lock in almost 3R, because why not? I could also, when you see it recover, I could see raising your stop from here to here and lock in that extra piece. Psychologically, that would be satisfying. And when that holds, it holds here, and then you see it start to take off again. Why not just follow that up to here and lock in the previous high and just say, I'm going to now keep that much? And now if that's my unit of risk, 1, 2, 3, you're probably locking in 3R if you do that. So those are just some of the issues, you know, associated with exit management. You could look at this now and say, here was one after this surge, here was a consolidation area. Here's the second leg and a consolidation area. And here's the start of the third leg. And those two consolidation areas where you got some sideways movement now was enough to cause the R10 to roll over and then resume. So you can also just sort of argue that I could be underneath there as a stop, but that's a powerful signal of a continuation to the upside. But that's mathematically going to happen when you see those two consolidations. Because remember, this R10 is looking at the last 10 price candles. So you get 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So the move from here to here is what constitutes the math to produce that. That's the logical price right now on this bar is right here. So now when price takes that out, you're feeling pretty good. That maybe this was just leg one. That instead of looking at that as 3 moves, that's really aggregated to one 10-minute bar move or something like that. So maybe there's more in this play. And again, I wouldn't be offended if when you see this consolidation and then the resumption, that you identify that belly of the R10 and just hold it. You could be at the 1 bar low. That would be fine too. And either one of those is acceptable. I was slow on that one. I think I could have been here on a 1, 2, 3, or at the edge of the dragon. I think my exit when the R10 came through the dragon, I think I gave back. I gave back too much of that nice move with this exit. I was still well above the PSAR, but I feel like to do that again, I would rather take that like right here at the edge of the dragon. On this third leg up, I think I should have been up at the skin of the dragon, and then when this rolls over, I just cash it here instead of here. I think that little piece is given back too much, especially since we're past 3R in hand. That's an exceptional gain, so I think I could have done better on that. This one happened while the whole market actually peaked and started to roll over. We were starting to see some real downward pressure in the market after that opening about 30 minutes. And so I look at this as a high and a lower high. And I think if I'd have been more aggressive, I could have taken the entry here. And called that a collapsing dragon off of that. What I elected to do was just get this here, because it looked like it was going to blast through this support level. And the standard risk box was here, and I'd already let it go 2 standard risk boxes below the PSAR, and it's sort of like, man, if I don't get this short now, I never will. Now, by the time that thing on the second, it goes to here, then the second bar down is here and closes there, I should have my stop from here to here to lock in that gain. So I should, after 2 bars and a move to that level, which has come all the way back to the initial entry, that whole move up has been rejected. I should be able to lock in that. I should be able to lock in this piece right here. And you could argue if you want to capture more of that. I'll let you decide if you want to be more aggressive with one of those stops. But at a minimum, you want to lock in that nice little wedge. Now, on this one, if you were ever going to put in a second position, when you notice that the R10, which has gone from summer to fall, violates here, and it's fall all the way down, and then this is where it turns to winter. You could be adding a second position here, or certainly here, if you were really exclusively focused. And either one of this one would be like a K2 seasonal change going to the winter, and this one is a pure collapsing dragon. What's really attractive about this one is that it's already below that entry, and now you're already down to testing the low of the day, which was the previous open. So that move has negated all of this previous move, and you could think about even adding a position here because now it could close the gap. I only had one position on. I had a span of control issue here, but that's just some ideas for you. And now that failure to put the second position on, whether it's here or on a new low of the day, any one of those three could have, should have been a second entry with better play. So this was I did not exploit the opportunity that was there. And now we'll notice that the winter peaks here right where it closed yesterday. And so the gap was actually filled with this move here. And now it's finding support where you're not allowed to be surprised that it finds support. And the winter turns to spring right here. You get that little wiggle. And when it comes through the dragon and hits the PSAR, I just take that exit. So there's 1 unit of risk. So you get about 1, 2, 3. So we had about 2.5, say 2 on the upside, and then 3 on the downside. So we're at about +5, and we're right back to where we started. So I just take that as a entry with an SSC, and let's see, maybe it wants to get back to here. So we would call that an SSC, and we got about 5R in hand. That fails immediately. That is a stop and reverse because we have a kata 2 to the downside. The fact that we've got this series of lower highs where the R10 peaks, and now the PSAR breaks. So you don't have to wait for the collapsing dragon here to get short. As soon as that R10 crosses through the dragon and flips the PSAR, you just put your standard risk box on it, and down we go. So what you're actually getting by doing that, by getting your entry here instead of here, is that on a standard risk box, you're getting that extra little advantage, which is worth about 0.5 extra R by front running the collapsing dragon. Because this is a collapsing dragon. This is a kata 2 to the downside. Check or hold. And now with with your standard stop here and you see that nice move, you're not wrong if you just drop this down to here. And just decide that you're going to lock in that little piece. Take the standard exit at the PSAR reversal, and then that becomes another SSC with a standard risk box. Which gets a fraction. I missed the collapsing dragon reversal, but that was a pretty good day. That was about +6 on clean energy by the time everything was said and done. Now I mentioned that this time frame right about here, after about 90 minutes into the session, there was a market signal where the entire market and all the leaders all rolled over at the same time. And so that's an opportunity trade on market conditions. So let's take a look at another sniper implementation of that. I think of this one as this is an opportunity sniper in Alcoa. And what I want you to notice is that just like PBW, this had the gap up. There's your OR3. So there was a little opportunity in here. It monkeyed around, and then at this time, at around 11, so we're about 90 minutes in, this is what I noticed. You have a double or a triple collapsing dragon setting up. And I want you to notice those three blue circles and the rolling over of the RL10. So this happened in the summer. See, the RL10 is green. So that's a summertime. And then you have a lower high. And now the summer had turned to fall. And now this thing rolled over in the fall and came through the dragon. And now here you got a lower high, and it's now in the winter. So this entry right here is the no-brainerest entry of all time. That you have a gap that's waiting to be filled. You have two lower highs. You have the obvious price decay of summer, fall, winter, and now you have a double collapsing dragon. I mean, that is as low risk an entry as you could possibly make. In a very liquid trader, which is Alcoa. And that thing just drops like a rock right down to where you're entitled to not be surprised. You're not allowed to be surprised if this thing drops to here like it did. Now, this was winter, and then here, because of that couple little pullbacks, this was turning into the spring. It was still decaying, but now when you get like the dragon horns to the bottom and it reverses higher and takes out the PSAR, that is just such a standard exit. And here's your 1 unit of risk. So that gives you 1, 2, 3, 4. This entry is a 4R trade, checker hold. So notice how valuable that, even just with a few indicators on there, you get really clear insights into the available. And that's why the collapsing dragon is our #1 favorite pattern, that when this collapses, down it goes to the next level of support, which is where it closed yesterday. What would we then call this re-entry? Lower highs, PSAR flip. Here's the collapsing dragon. If I waited for this, I would call that a collapsing dragon. But because I'm getting this, this is a pocket entry in the Kata 2 pattern. As soon as this thing rolls over and falls through the skin of the dragon and the PSAR flips, I'm getting short on that instead of waiting for this. And because that's my standard risk box, that front running it that little bit is worth an additional about 0.5 R. Like, you don't know it's a collapsing dragon and going to fail until it actually breaks. So you're operating under a little bit of uncertainty there, but in my view, that's warranted, especially having just seen the previous move. Scratch, because why not? Now I get a PSAR break here again, and I want you to notice that we still have the lower highs, but this never broke the PSAR. Looks like a little coral snake. This is actually still a lower high, and now we're getting this little range compression. Is it going to be this, or is it going to be that? Well, it broke the PSAR, and I'm willing to trade it to the downside. And then that gives us another 1 unit of risk. 1, 2, 3, another +3 in that last hour of the day. And I want you to notice that this collapsing dragon, this whole price level that it was holding support at, tracks to yesterday's close. And when that finally broke, the move down was sharp. So if you don't get this, you have to at least identify this as a turning point. So if you don't get this one, you have to get this one. And either one of those gives you the move that was available. All right. So I think of this one as an opportunity sniper, and I just want to draw your attention to the sense-making framework where we're looking at those 4 seasons of MACD and the turning point in the R10s and how the dragon is rolled over, and then the collapsing dragon, and then previous day's close as sort of a barometer. Like, we don't know in here if it's going to break up or break down, but when it does break down, it's decisive. Okay. On the 30-minute chart today, this is the point I was making about at 90 minutes in. That's when the market went from sideways and trying higher to a decisive downward move. And that violated this support level, has come all the way back to the previous, what was previously resistance is now becoming support. So if it breaks further, we could look at this as a next target, the 5-day low. We could take a look at this as the previous resistance. And then if that fails, coming all the way down to this triple bottom, that's all the way back at 380. So there's a argument. As fast as this went up, it could come down even faster. So sideways quiet, this is not unusual. That was a vote down. That was a test right there to see who was paying attention. On the daily bars, looking back 30 days now, there's our 30-day look back and our 10-day look back, 5-day. And today was an open here and then a close that finished at the low of the day. And now we're right in the middle of the dragon. And there's the lower skin of the dragon, the PSAR, the belly of the dragon, the belly of the RL10 all the way down to 378. So that's all at risk right now. Until the belly of the dragon is violated, this thing still could tactically return and get above 400. But boy, that was a decisive move down. So this is a nervous in the service market. On the 3-day S&P, all this did was, this is a Kata 2 that has come up to the PSAR and is just showing some weakness north of the dragon. So this is not dangerous yet on the 3-day, but this could still go. But it's got to get above 405. It really has to get back to 400 and then above 405 to be free and clear. So this is ordinary weakness. On the 9-day bar, we are still above the crucial level of 380. We just saw the first sign of weakness when it re-entered the dragon, but it comes out of the dragon here at about 382. So spine of the dragon around 390. You don't want to see much more of that. You'd like to see this continue up. So that's really the question. Does it get to 380 or does it take out 400? So there's about a $20 tactical trading range. We're right in the middle of that in a critical state, ready to see. It has to break above 400 to be interesting. And then if it goes the other way, a break below 380 is decisive. Otherwise, this is just trading range for shorter term traders. Okay? That violation of 380 would be violating both of those, and then that would be a signal of a really strong downward move coming. If it gets above 400, then this is now in play at 410. Today's price action, just from a distance, we'll notice the S&P was off 1.5. The Russell and diamonds were the weakest. Tech didn't lose quite as much. Emerging markets were better. Treasuries, this should be in yellow. Treasuries were a strong 2.4%. That should be in yellow. Sorry about that. All right, let's look to see where the weakness was. That would be the place you would expect more failures tomorrow if today's trend continues. So, ARC Genomics, Finance, Oil, Oil Exploration, Silver, Simon Property Group, and Uranium off 2.25. The next cluster, and this is why this is dangerous. I mean, staples were down 2.7. ARC Innovation, Marijuana, Bitcoin 3.3. Ethereum off 9%. Now, all of the financial disruptors, which had helped boost this market, are all down more, anywhere from 3.5% to 7%. This is more troublesome here, that Alcoa and Intel were off 2.5%. Microsoft was minus 1.89%. NVIDIA in the semis was off 1.8%. So real weakness in this market. And then Tesla failed for 2% today. To the upside, again, here's our baseline, the S&P down 1.6. So you had materials, FANGs, real estate, consumer discretionary, tech, biotech, and blended commodities between 1.4 and 1.1%. Then you have lumber, Mexico, Brazil, and the Aussie dollar to 0.72. Agriculture and the other lumber down 0.5. Then lithium, wheat and precious, clean energy, basically scratch. And then the only two that were positive for today, the VIX at 3.5 and Treasuries at 2.4. Here's our metals. Cliff and U.S. Steel off 1%. Alcoa, our other metal, off 2.5. So Alcoa and then in the semis, Texas Instruments -1, NVIDIA 1.8, Intel 2.6. So these two in our special categories, Alcoa and Intel, are real candidates for further weakness. Devon Energy was a disappointing 1.37 as well. So a wide range of failures in what had been leaders lately, and then really just some specialty winners in defensive areas. I like the fact that Mexico and Brazil didn't lose as much, but not much to pick from. Treasuries may be the best play right now. But this is sideways quiet, so that's not surprising. All right, let's look at the traders. All right, so here's Satya. So he gets the early move. MMRB cashes a nice win. Here's the PSAR flip. Oh, and then you also, if you don't get that whole piece, either the belly of the dragon or the belly of the RL10, and there's still room for that to work. And then here's your SSC, and here's your Kata 2 short. So Coinbase was really in play. And even missing all of that, he still brings 1.2 in on a measured trade. So that's still good work. First Solar, he's able to take advantage of this is when that market collapsed in the morning. He gets paid. Quick scratch gets paid. There should be a re-entry here. And then that afternoon, double bottom, and then a Kata 2. This could be interesting for tomorrow, that little recovery. It recovered, whereas the rest of the market did not. Tesla, he just got a piece of it. Minus 0.7, plus 1. Missed that. But still, 0.3. We'll take it. Every little sandwich helps. Alcoa. The OR3 takes a minor loss. Recovers on this one. But man, when that whole market is melting down, that's the easy re-entry right in here. It's below the low of the day. So that's just getting started. Don't be so quick to cash that. But if you do, on that 1, 2, when it rejects the dragon, even if it makes a new low of the day, that's where you got to get re-entered at. Or here, or here, or here. And with that size of an MMRB, we left 1, 2, 3R on the move down to here. Still, we'll get paid. Constantine, this is on the Dow Mini on the 3s. And he takes the sideways quiet channel Z3 pinch breakdown for 4.4 right by the numbers. Nolan in Tesla, he gets 0.6, but this doesn't feel like an efficient way to get. This is fine, and he's so this is actually pretty efficient. He gets those pieces. Quick scratch at the edge of the. Those are all pretty good. This looks a little premature. There might have been more, but still, I take it back. That looks actually pretty efficient for 0.6. In the afternoon, he gets a little bit more. So he gets 0.9 in the afternoon with his measured shots. I think that, they missed the re-entry here. This thing was so clearly down. That's leg 1, and then it rejects the dragon. I think you got to get that. I want you to notice how much screen space is not being filled up. So that makes this feel really tight and compressed. If you doubled the size of those candles, it would be easier to see those re-entry points. Devon Energy, we got a span of control issue here. So the OR3 entry was there. Uh, I know you said you don't want to do the OR3s, but that's a better entry than waiting for the 3R move to occur and then try to get it. There's your crossing of the VWAP and the PSAR flip. That is such a strong signal to the downside in a sideways market that wants to fail. And so getting short here on a collapsing dragon is fine. Captured the leg, and then there's your two re-entries. We should be crushing that move. Especially with as choppy as the Tesla moves were, you got to be able to have more than one screen up so you can see the ones that are working. And Devon Energy is much more directional intraday than Tesla. Because when energy starts failing, nobody comes in to bail them out because of a philosophical commitment or fanboyism, whereas Tesla has some fanboys. This is such a small, a smaller capitalization that it will be more directional than Tesla, which is why I like it. Griff doing caught at 2 to the downside by the numbers. He's got his range stat marked off. It was almost perfectly a range stat move. It from here, this lower high, it moved a full frog box down. He tries the SSC. It doesn't work, so he stops and reverses, and that pays for the trade, and he nets 1.6. Right by the numbers. Very well calibrated. This was Woj from yesterday. It was basically flat for the day yesterday. Today, we missed the moves, get caught up in the chop, and then we got to see this lower high, and then the breaking of the dragon here. That's your collapsing dragon. Um, a, yeah, a little too choppy and cliff. That should, when this doesn't close all the way to here and break, then that's the kind of moves we can expect to the upside. Failure to fail is more information. So this feels like early chop and then missed the directional move. So maybe some span of control issues there as well. Tesla, Devon, U.S. Steel, and Apple gets a nice big recovery on Devon the mover. So I like to see that he was able to stay with the winner. He stayed out of the chop, got the piece that was there. Except our re-entry needs to be here. These are two micro gains. We got to be able to get that re-entry. So there's that. Let me take a look at the swing trades real quick. So we had closed a nice trade in treasuries. Let me scale out a little bit here. Yep. So these are the 30-minute charts. So we'd closed a nice trade in treasuries to here. We were stalking the sell-off. Today there was the big gap up and then a sell-off. And then right around here is where the market started tailing off. And then treasuries responded with a inverse move. And then because I have SPY, IWM, VIX, and treasuries on my little tactical screen all the time, I could see the sell-off in SPY was triggering sharp moves up in volatility and treasuries, and so I elected to put a little wedge in here on treasuries with this little PSAR. So this outer box is the move of the day. This is my risk box right here, and this closed at the top of the day. So if this gets going, we would expect to see that as part of more weakness tomorrow. If we see more weakness tomorrow, then I would expect treasuries to keep going. So I wanted to get started on that as maybe a 1 or a 2 day trade. So treasuries were in. Clean energy, we're still in that nice swing from all the way back here. And yesterday during this move, we had raised our stop to here. And today's little shenanigans. Now remember, we turbo traded this. So the swing trade stop was here. So we made money. We made good money on PBW in here. So I feel like that has given me the cushion just to leave the swing trade here. So that might have been just a one-day sell-off today. And this has been such a good move in clean energy that this could just as easily go tomorrow. But if it fails, we will take the exit at 43.75 tomorrow. And we made enough money on the turbo here to allow us to enjoy that little cushion. So my stop bottom line in PBW remains here. Okay. Brazil. Let's see where we're at here. Yep. So our entry on this was here. Today gapped up and it came down to here, and we took the exit right in here just to be done with it. I did not want to hold that overnight. So I took the scratch. Cliff, we are still in from here. And yesterday during this little sell-off to here, we had raised our stop to here. That's still in place. Today's price action was just down like this. It was kind of... This didn't sell off as bad as the whole market did. So I'm content just to leave that stop right there near this support level. And I'm giving it that much wiggle room. And then, so we've locked in this much gain. So I'm just, so no action on Cliff. Today, took the exit in EWW. So we were long two positions, one from here, one from here. We had moved our stop to here in the afternoon. I could see that one coming, and when the whole market melted, I just decided to grab that because we had two positions on. So I wanted to optimize that. So we're flat now in Mexico with a nice trade in the bank. U.S. Steel, we're just stalking it. Devon Energy, we exited 3 days ago. We're just stalking that. That's probably an intraday trade I should have had. Span of control. We are just stalking real estate. Our last trade was from here to here. We've been stalking it for 3 days. We'll see. This is starting to look like a critical state right in here. And maybe there might be a trade on that breakout in either direction. We'll see how that goes. Not committing to it yet. Tesla. So yesterday we got the entry from here and enjoyed the gap up to here. Suffered all the way down to here. If I had to do this again, I would have cashed here, but we didn't. So my stop is at no lose plus dinner for 2 compared to that entry. So I'm giving it a little bit of room. Like this could still recover. That's fine. And I've got a little bit of a cushion, and I'm just happy to lock in that little wedge right now. So giving it some room to breathe. McDonald's was one where we got a really nice start on this yesterday, early in the day. With our stop like here. And this ran up and had a nice close. And today, it just sold off. I watched it go through the PSAR and said it felt like dumb for not taking that exit. And then I had to lock in that little wedge. So I took the exit here, missed the downward move. So I was just happy to escape with a little sandwich on that one. I didn't play that one particularly well. Marijuana. This was another one that we speculated the entry here on the multiple kata 2s. It gapped up and then sold off, so I just kept the no lose plus dinner for 2, and now we're flat on that one. It just didn't follow through. And then Ethereum, we had that nice entry from like 470. Yesterday was that nice big gap up, and then today it peaked and then sold off to here. I wanted to keep half of that gift, So we're out of that at 780. So that's a move from 470 to 780, which is plus $3.10 on a 30-cent risk. And that's what a 10R trade looks like on a single position. All right, let's go to the reports. All right, dashboard number one. So we are still in sideways quiet. You can see that sell-off from today drove us down to overbought on the 2-day and introduced some weakness on the 30 and 10-day. So that's how fragile a sideways market can be. Even though we're still in sideways, we gave back enough that we're now 1.2% underneath the 200-day moving average. The volatility is still showing us marginally risk on. But that today was a warning shot, a reminder of how quickly this can all turn. In the Dow, our large caps, an increased number of auto framers. We had 2 5DDs, one of them in Cisco, one of them in Johnson & Johnson, which is 3.9 to 1. It was down 1.6%. It's down 5 3/4 for 10 days. Made important new lows here. Big breakdown here in United Health, which was down 2%. And I should do better at collecting that swing trade. I'm just not doing that very well. We've seen that weakness. I just haven't personally exploited it. Nike and Pfizer, or I'm saying Pfizer and Procter, both with weakness in the healthcare. The weakness in Coke continues to be a problem. We saw that from this weekend, and it was down 3% today. So there's more weakness in that core company. ETFs were more resilient than the U.S. large caps. Only breakdowns here in staples and healthcare. But treasuries, the lone source of strength. No auto framers because we're so close to the 10-day high across the board. So this was a weakness that was more in the U.S. than the globals. Standard framing numbers for the auto framer. And now notice that nothing is on the squeeze. Today's range was large enough that nobody is squeezed at better than 2 to 1. We'll go right to the sniper. With the weakness today, we get an increase in the number of Godzillas. United Health is a Godzilla that's in play. I should be doing better on that one. Marijuana is a Godzilla, quiet Godzilla here in the tactical set. I think HRL is another healthcare too. That's a raging Godzilla. In our tactical set, as you know, I like the things that are double green. So Traveler, because that tells you what's in play. Travelers, EMR. There's some real weaknesses in there. Still dominated by the summer and spring, but there was real weakness. This is the first day of significant weakness, so be ready in a sideways market. You can see the width of the weakness here. Only Tesla was relatively immune. And real weakness here. Treasuries, Treasuries the only real sign of strength at all. So this is broad-based weakness. So let's be ready for that tomorrow. All right, that's everything I want to cover except for this last little piece. Who are the most, where's the trading value? The ones that have large range percentages for volatility and reliable, consistent fraud quality numbers. Tesla, Clean Energy, Apple, Alcoa, Boeing is your top 5. That's how I got into clean energy. Was it's continuing to be a reliable intraday mover. All right, that's everything for today. We'll get this published and processed, and we shall be ready for this market tomorrow. Take good care.